All right, Jeff Santoro, you know that I like stocks that aren't always getting a lot of attention. It's an area that every once in a while I'll go digging around and try and find up something. And I've got a stock that I like that's not really getting a lot of attention that I would buy more of right now. And I want to talk about that here with you. But before we do that, I'm Jason Hall and this is The Smattering. And our videos, of course, are sponsored by The Motley Fool. If you're looking for more great stock ideas than the one we're going to talk about right now, go to our special link, fool.com/The Smattering. Motley Fool is going to give you its 10 best stocks to buy right now. Be sure to check out that link when you're finished with this video. Hey, Jeff, how's it going?
Hey, so I know that you like not undercover stocks, but maybe ones that are not being talked about. And I know you like banks, and I have a feeling you're going to throw a bank stock at me. So we had all that craziness back in March. We had the bank failures. There was the worry that this was going to be a contagion that went through the banking sector. I know the bank you want to talk about is not one that was really in any danger back then, maybe actually could have been a beneficiary. So why don't you tell us what it is and why you're excited about it, even though no one's talking about it?
Yeah, the great reveal. And this is definitely not an under the radar bank. It's Bank of America, one of the biggest banks by assets in the United States. They have a massive commercial banking business that's, where people and businesses do their banking. They have a big investment banking business. They do lots of wealth planning, right, through their Merrill Lynch subsidiary. So they have all of this stuff and everybody knows about it. But like I said, a couple things, right? So March was tough. May, we had another bank failure. All of these fears that the banking sector was going to really go through a mini crisis that was going to turn into a major crisis. Here's the big one, Jeff. Interest rates have skyrocketed so fast. Usually interest rates going up is good for banks, but they've skyrocketed so fast. It's not really a great thing for banks. So I want to talk about why, number one, why is nobody really talking about Bank of America right now? And then I want to talk about why it's a stock that I would absolutely be buying more of. So again, we're in between earnings. There's not a lot going on. It's a really good thing nobody's talking about Bank of America because unless it's earnings season, chances are if we're talking about a bank, it's probably not for a very good reason. Jeff, you talked about things being beneficiaries for Bank of America, certainly being one of the systemically important financial institutions. That's good, right? They're too big to fail. It's viewed as a kind of a bastion of safety. And we saw bank regulators just propose some new regulation on the basically too big to fail banks, which is what I'm calling them now, which is the tier of big banks right below the biggest too big to fail banks. So they're trying to push forward these regulations that's going to cost them more capital. They're going to have to take on debt to have more capital available. And that could be a beneficiary for Bank of America because it might have people that are banking with these not quite biggest big banks say, you know what, maybe they're not safe. They want to do more regulation. Maybe we should just move our banking relationships, right? So Bank of America has maybe the biggest low interest yield and zero interest yield deposit base of all of the banks. It's this massive source of capital that it has that's a big competitive advantage. Now, Jeff, I want to share why I would buy it, why I'd buy Bank of America happily right now. I'm going to pull up a screen share here and just talk a little bit about valuation because when you're looking at these big stable institutions like banks, paying the right price is probably the most important thing to securing the best long-term returns. So I'm going to start with price to book value. Okay. So if you look over the past 5 years, it's traded an average book value of about 1.14 times. That's today it's trading for 89% of book value. That's basically saying if you could come up with all the money to buy all the shares of Bank of America, you'd be able to buy it for an 11% discount to the value of those assets. Now, I do want to say that could be a little bit of a value trap because Bank of America, like a lot of big banks, has those 2.75%, 2.5%, 3% mortgages that everybody got back in 2020 and 2021. That's a pretty big book of those. So that can weigh on its returns. But I think the part of the solution to that is that low cost of capital, low yield deposit base that it has. And I think it's going to be able to keep a tremendous amount of that. The other thing is that just on an earnings basis, Jeff, you look at on a price to earnings basis that's traded on an average of about 12 times earnings over the past 5 years. And right now it trades for 8.2 times past 4 quarter earnings and less than 8.5 times expected earnings for the next fiscal year. Now, again, I think you have to be careful. You see those and be like, wow, that's like more than half as cheap as the market. Banks do tend to trade for lower earnings multiples than the S&P 500 because sure, they have all the loans, they have tons of money, but they also have massive amounts of debt. So they have the risk of owning all of that debt and having to make sure that their customers are servicing it, right? So that's why you see those low rates. So, but again, 8.5 times, 8 times earnings is incredibly, incredibly cheap. So to me, that says Bank of America, super safe, solidly profitable, has a great book of business, great relationships with its depositors. I would happily buy more of Bank of America right now.